If you own land or building you wish to sell, upon making the transaction, the taxman will require what is due to him, a 5% charge on the gain realized. This is as a result of the reintroduction of the capital gains tax this year after a 30-year suspension. The aim of reintroducing the tax was to boost revenue collection, as well as widen the tax bracket, with the Kenya Revenue Authority giving itself a target of raising 7 billion shillings from the implementation of the capital gains tax.
Capital gains and compensating tax is more of an administrative issue, really. This tax was reintroduced last year, effective January this year. But then again, it was a cut and paste of a 1985 legislation. It has a lot of gaps, and we think that the government just ought to review that.
However, stockbrokers and KRA were involved in a pickle as to who should collect the tax at source, with the latter insisting the obligation lies with the brokers.
The truth of the matter is that over the last decade, the greatest amount of wealth has been made in the property and capital market sectors. However, and quite ironically, we continue to shield those who are making the largest amount of wealth from these two sectors from taxation, while in the same breath continuing to tax incomes made from meager sources, including from formal employment.
This spurt contributed to a decline in performance of the bourse, with analysts saying foreign investors were shifting their investments to other markets such as Nigeria and Egypt that don't have the capital gains tax. The National Treasury admitted difficulties of implementing the tax, opting to replace it with a 0.3% withholding tax on the transaction value of the shares, hoping this would ensure enforceability and compliance. The 5% tax was considered fair, given that Tanzania charges it at a rate of 20% for local investors and 10% for foreigners, while Uganda levies the rate of 30%. Ronald Owili, News Hour Business.